Yo, what's up YouTube? It's Mr.BuyTheDip back here with another video. I want to talk to you guys about Walmart, okay? Talk about safer investments, talk about taking risks the right way, okay? So Walmart absolutely popped today. I saw 107, right? And this stock has strong history. Last 5 years, up 124%, okay? Steady growth, really nice growth. You know, as y'all can see, if you would have bought this around this time, 2025 little crash right here, right, because of tariff news, that was the time to buy. Overall this year, I say anything under $100 is a buy, even $100 flat is a buy, okay? A very well proven stock, okay? But now I'm going to talk about why they went up today. Had an OpenAI deal, okay? So that OpenAI deal with Walmart is going to be very effective, okay? So you'll be able to shop with Walmart incorporated with OpenAI. ChatGPT this is the future. This is not a bubble, you guys. This is the future. And OpenAI just made a deal with Walmart. They made a deal with NVIDIA, made a deal with AMD. Any company they make a deal with, I want you to look at the companies. NVIDIA, good company. AMD, good company. Walmart, amazing company, right? I want you to look at their, look at them all the way back from even 2015, even 2007, right? It's been a steady increase. This business has very good steady growth. Now, markets are, they have this cycle, so they rise and fall. So having strong dividend-paying stocks like Walmart or SCHD gives you consistent return during downturn. Now, I'm not saying just close your eyes and keep buying Walmart, right? I like to buy things at a small pullback. I like to buy things, load things up, load stocks up when there's uncertainty. You could dollar cost average, right? Just buy every Monday, something like that, obviously. Now, when we look at the dip, let's just take the SPY as an example, okay? When we look at the dip last Friday, it was very scary. Things are still overvalued. We're slowly creeping back up. But look at this dip we had last week, right? We were up and then we go down about 3.6%. 3.6% down on the S&P 500. That is not a small move. We go from 673 all the way down to 646. What do you do around this time, right? I was totally safe around this time. Let me show you why, okay? Because I have parked money in SCHD and I have parked money in Walmart, okay? So if I want to buy something like Uber, right, I want to have a well-diverse portfolio. A lot of people like to say, load up on tech stocks. You don't need a diversified portfolio as long as you time the market right. I mean, I understand that, but you never know what Trump is going to say. That's why I'm always buying SCHD. Dividend yield is nice. I even bought some more today, as y'all can see. 2 more shares today, or 2 more shares yesterday. Then I bought $80 worth of it yesterday. I'm always buying SCHD. If I wake up and see a good price, I'm going to buy. As simple as that, okay? For example, today again would have been a good buy around 26.6. It is just opportunities you have to react on, okay? Now, these holdings protect you from risky plays, tech, crypto, and growth stocks, okay? So when markets drop, your safe assets help offset losses and give you liquidity to buy dips. So what is liquidity? Okay, for my beginners, for people that don't really know what that term means, basically being wiped out. So if you look at XRP, right, this is a well-known crypto, okay? Just last week, we went from $2.8 all the way down to about $1.5. I don't know why it's not showing, but we went down to $1.5. I made a video on this right away on my TikTok, and basically banks sold, the big boys sold a lot of money and they rebought at a lower price. So that's called being liquidated, okay? So basically when you have a huge sell-off and people who were all the way up here, they basically got, they got tanked or they lost a lot of money. People who were margin trading, leverage trading, whatever, they, lost a lot of money. So when we talk about protecting your capital, I like to say protect your capital, okay? Because markets can turn on you very quick. I want you to look at AMD as an example, okay? So AMD showed an upside from 160, okay? So from about 160, and I caught every bit of this move all the way up to 225, okay? The reason why I was able to catch this move is because I know I took a big risk. If y'all go look at my previous videos, I talk about AMD. I made almost above 4.5K, whatever. But the thing is, this could have moved against me too. So if a hedge fund, if an analyst came out and degraded AMD, they went up 30%, but they could have went down 30%. That is how critical it is. Think about the downside with a lot of these tech stocks, with a lot of these big tech companies, okay? Small news like that can have a really, really big impact, or even something like business uncertainty. So what I like to say is, if you want to look for an opportunity, look for a dip, but do not look for you do not buy it if the company is doing bad. So I wouldn't be buying Uber at 92, 90, 91 if the company is doing bad. No, that's not what you do. If the company still has positive cash flow, right, they have good consistent returns, and then you go ahead and see something like tariff concerns, news uncertainty, then that's a good buying opportunity, and that's exactly when I'm buying. Now, let's say that noise gets louder, move over to a safer investment like SCHD or Walmart, okay? So SCHD basically tracks high-quality dividend-paying companies with strong cash flow and long dividend histories. So what that means is, if you go down and you look at this analysis that they put out, consumer defensive is 19.28%, okay? You look at their top 10 holdings, a lot of these companies, Coca-Cola is a big one, Chevron is a big one, PepsiCo is a big one. These companies have strong dividend yields, and they have good portion in this ETF. If you look at PepsiCo as a company, for example, right? Look at the last 5 years on this. I like to look at this company as a nice, consistent stock, okay? But last 5 years, only up 7.8%. Look at it from, a perspective from the 2000s, okay? This has been a consistent growth up. So if you want to park your cash somewhere like PepsiCo, cool, right? You can do that. You look for an opportunity like right here when the stock was down around April, May, because of again they were down because of news uncertainty. You could always buy right here or buy on these dips. You can even take that up 3%. Put a lot of money in PepsiCo, and their dividend yield just shows you the reason why you could buy the stock. Very, very, very strong fundamentals mean I'm going to buy this company regardless of what the news says. And that type of confidence is built with strong cash flow and strong dividend payouts. So if you're an investor, like when I look at Walmart, I'm looking at it as, I want to hold this forever. I want to hold this for 15, 20, 25 years. When I'm looking at SCHD, last 5 years, yeah, they're up 37%, whatever. But if we go lower to like 25, I'm going to buy even heavier, because I see an upside of 20% back on my money in 5 years. But most importantly, I see my dividends getting stronger. Okay, let's look at this from like 2012, right? From there, we're up 202%, whatever. So if you can get another 100% up in about 10 years, sure, but that's not really the goal. The goal to invest in a dividend-paying ETF is to make it a passive income strategy. So if I'm making 20K a year off of dividends, I got about 200, 300K just in that stock. Okay, that is where the game begins, but you need to practice those games now. Okay, you need to practice those habits now. As soon as you hit big with a tech stock, as soon as you hit big with your option play, put some money in here consistently. Consistency is key. Anything under $27, I'm buying. If I wake up and see 26.8, I'm gonna buy. I don't even care about my average cost that much, right? It's just under $27, I'm buying. As simple as that. Okay, now when we go to selling risky, this is exactly what I want to highlight. So sell a risky tech position, that's up 30%. Move profit to SCHD while waiting for your next pullback in the market. That is the best way to do it. A lot of people have made thousands of dollars just doing this. So your money is always working for you. It's working for you, because if you just sell, let's say you sell a tech stock at the peak, okay? For example, I bought AMD and I sold at the top of the top, right? I sold at about $233 a share. Now I want to wait for a pullback for $165. That is a big pullback, all right? So this may take you another few months till you wait down for that pullback. But while you're waiting, what is your money doing? Is your money in shares? Is your money working for you? Totally it is. I want you to see, look at what I'm telling you guys right here. So while I'm waiting for a pullback, for example, with AMD, my money's working for me in a stock like Uber. That is going to go back up and test $100. But then also my money is in SCHD that I'm going to hold for the next 10 years. This is chess, not checkers, guys. And then while I'm doing this, I again got another play I want to hold out, my option play, and take it up another 15 to 20%, sell, take some profit there. Know how to diversify your money. And this is one account. I got another account where I hold QQQM, Nvidia, and Walmart. So your money should be working for you at all times. Don't just throw your money in savings. Obviously, you want to have money saved, but the quality companies matter. The quality ETFs matter. You only need 1 or 2 ETFs to really change your life. I don't believe in having 10 ETFs, 10 stocks. Nah, I don't. Unless you don't got $200K to invest, you don't need to own more than 5 stocks, right? I think 3-4 stocks that are super good, consistent cash flow, load those up with 1 ETF, diversify, you got it. The game is yours, right? So here's a summarized strategy. Take profits from Nvidia, AMD, or crypto, rotate into SCHD or Walmart, preserve capital, earn dividends, reinvest back when the market is on sale. But you can't be scared when we go back down lower. So for example, this was a good buying time around here, right? But the market dumped. We took a dump last Friday, okay? So all I did was I just bought more. And we're going to slowly creep back up to 96. Then we're going to go back up to 98. Then we go back up to 99. Then we're going to hit that 100 target. I told you guys, Uber is going to go to $105 a share. Whether it's today, whether it's next month, whether it's next year. This company is very, very strong. Their network is very, very strong, okay? Thank you guys for watching. Like and subscribe. I hope this video helped you. I hope you understand how to be safe in the market, not just throwing all your money in one option call because you want